It's been a while since I've taken a look at the Watch This Wednesday portfolio, just because it's really been a long time since I've been able to make a video for that series. So today, just out of curiosity, I opened up the portfolio to take a look at it, and I was pretty impressed with what I saw there. So I figured today, since I didn't have time to fully research a stock, and as many of you know, I really like to make sure I do a full in-depth research for every company that I talk about before making a video, and time just didn't allow for me to do so today, but I wanted to share with all of you my portfolio, how it's been doing, any changes I might consider making, and what positions have really surprised me. So what I'll do here today is just bring you over to my computer, we'll go through this together, and we'll just kind of talk through it all, and hopefully everything is still doing well by the time I pull up the portfolio. Also, actually, before I do all of that, I just need to say, not advice, don't take this as advice. You need advice, speak to financial advisors. It's just for entertainment purposes only, so do not make any investment decisions based solely on what I say here. It's been a while since I've said that, but I think that actually came out pretty good for a first try in a month or so. To start this off, I actually have gotten a lot of questions about what platform is this that I use for these videos. This is just the Webull desktop application, so nothing fancy. It's for free if you have an account with them. I don't even think you actually need an account to get the desktop version of it. And yeah, so if you're curious, this is just right through Webull. It looks very similar to the trading that E-Trade has as well, so if you are, for whatever reason, not a fan of Webull, E-Trade has a very similar platform as well. And I believe TD Ameritrade does also, but I've never used that one before, so I can't speak to it. Also, again, just worth noting, this is not real money. I don't have $1 million invested, or certainly don't have $874,000 just sitting in cash. This is just the paper trading. But again, if you're new here, if this is your first time seeing this portfolio, what I've done is just made a series of videos. It used to be every week, every Wednesday, where I would review a stock and share with my thoughts on it. And ultimately, if it was a company that I liked, which basically it always was, then I would add it to the portfolio and really would just try to purchase these in $5,000 investments, sometimes more, sometimes less, just depended on how I really felt about that company or the ETF. So I believe we have anywhere from like 21 to 23 stocks inside of this portfolio as of now, which is pretty good. I am kind of upset that basically this is like the third or fourth time I've had to start this portfolio over because like information's gotten deleted and whatnot. I wish I could see how everything has been doing altogether, but overall I can't really complain too much because as of now the portfolio is up $17,000 with, give or take, that would be like $113 invested or something. I'm sorry, $113,000 invested, something along those lines. So not too bad for returns. Also, maybe just another thing worth mentioning is this is going to be the price return, not the total return. So the difference being is I believe with paper trading, we don't get to see how dividends impacted the total return. So this just simply shows the gains or losses based on the price, but does not take into consideration any form of dividends. To my surprise, there's only 5 stocks here that are losing positions out of the, we'll just say 21 stock position portfolio, which is not too bad considering some of these were pretty aggressive picks. Some of them I didn't expect to really do that well for us. So I am pretty happy with the way that this portfolio has performed. Admittedly, the 2 worst performers that we have in here, Roblox and Jumia, are definitely the ones that surprise me that they are just doing so poorly for us. Kind of given the nature of both of those businesses, I thought they would have been a little bit more promising. Now, going into Jumia, I did acknowledge the fact that there was going to be a little bit more risk associated with that than maybe like a US-based investment or something that we can just get better information on. But I am surprised to see it doing so poorly for this portfolio. But again, overall, it's not like it's down too terribly for us. And same thing with Roblox, just given the way that business is able to make money from people, purchasing items in the games or buying the games or anything along those lines, I am surprised to see that stock hasn't been performing that well, and it would be something I'd like to take a look into. And even though Weber is down, I am pleasantly surprised at where it is because I honestly thought that was just going to destroy the portfolio overall. Again, really the only reason I bought it is because I love their product. And I kind of expected it not to do great as a stock, given that it sells grills. So it's not like a subscription service or it doesn't have like the greatest form of reoccurring revenue. But I'll take a $106 loss on a $1,000 investment. That's not too bad. Squarespace also does surprise me there that it is down so low because I really do look at Squarespace similar to Shopify. And as we could see, Shopify is up just shy of $800 in total gains for us, which is a pretty good position. Now, obviously, there's a significant difference in the price per share between those two, but that's kind of irrelevant. I just thought that Squarespace, again, given that it is a subscription service, that it has multiple ways of bringing in revenue through that subscription, that this stock would have performed a little bit better for us. So I'm not going to cut my ties with it yet, because I really do think this stock still has a lot of potential for us. Facebook, well, we all know what's going on with Facebook, so I don't really expect that one to do that well for us. I think I just got a little excited, bought it near the high when it reached like $1 trillion market cap and pulled the trigger on it. Admittedly, probably should have calmed myself down first before purchasing that stock, but again, it is what it is. You're not going to win every single one of these. And now, I don't necessarily feel like I need to go through every single one of these positions individually, because that would just be kind of boring. I'll more or less just point out some of the positions that are surprising to me based on how they've performed. Also, too, I have not done any research on these companies in a while, so you might know something that I don't that might be a reflection of why the stock is currently performing the way it is. So if you are aware of something, if I don't acknowledge something, or if I just don't understand why the stock has been performing that way, please leave a comment down below letting me know, and you can let everybody else know maybe what is influencing that stock's current price. One thing in here that is surprising to me, and I'd like to take a look back though and see maybe when I purchased these two positions, are the two ETFs that we have in here. So we have Vanguard's Technology Index ETF, and then we also have Vanguard's S&P 500 Index. That's VOO and VTI. I kind of would have thought that VTI might have performed a little bit better than VOO, just given that it is in the technology sector. But I'm sure that might have something to do with the recent supply chain issues, or even something along the lines with the semiconductor issue or shortages that we've been seeing. So that might be the factor why VOO has almost doubled the amount of gains that we have for VTI. But again, you kind of always expect tech to maybe do a little bit better than, companies like, I don't know, McDonald's or Pepsi. But clearly VOO seems to really be that anchor that I wanted it to be in this portfolio. If you don't recall, when I purchased VOO, my reasoning behind that one is I really just wanted something that would be able to offset any negative performance in this portfolio from some more speculative or risky investments. I'm also surprised to see Sealed Air has gone up for us so much. Again, that's the company that makes like Cryovacs and I think like those bubble wrap things for packaging goods and whatnot. So that one is definitely a little bit of a surprise to me, because that is about as boring as a company as it gets. No, it's not our top performer, and it's closer to the bottom of, good performance. But overall, we can't really complain about a $440 gain on a company that doesn't do anything crazy. I mean, yes, their product is definitely a need, and I'm sure, maybe they have their own supply chains that have been able to help out with this stock, so they haven't been as influenced by, those shortages going on. But again, we can't really complain about that position. I do think it's kind of interesting to see that Apple has basically got us about half of what Microsoft has done, given that I bought Microsoft later than Apple. So Microsoft has actually returned more for us in a shorter time frame than what Apple has. Now again, yes, I think that's a very fair comparison between those two companies, but Microsoft does have a lot of other extra things that they do to help them generate other revenue. They have like Teams, they have Xbox, they have, did they buy Skype? Are they the ones that bought Skype? I forget that one, but they obviously have many other different opportunities to generate cash flow for the business, where Apple is starting to definitely get more and more into that field as well with things like Apple TV. They now have like the Apple Plus. I think they have like their fitness thing coming out, the news, as well as people buy their products religiously almost every year or every other year. So I think Apple will eventually do a much better job of generating recurring revenue, but we can't really complain about a company that generates like $1 billion a quarter in product sales. Again, not complaining here, but I would have thought that some of these other companies that I have, Splunk, I kind of would have thought Splunk would have done a little bit better for us. I think cybersecurity is absolutely a huge area and one that's going to be growing, especially as we get more and more dependent on internet connection and services. So I would have thought cybersecurity might have treated us a little bit better. Overall, though, it's still doing pretty well for us, so there's nothing really major to be complaining on with that position either. But I will say, it is the top 3 positions in this portfolio that actually have me by surprise. A lot. Now, Lowe's being up $1,700 is pretty crazy for me, and again, that doesn't include their dividend, which is absolutely crazy to think about. Because I know a lot of times when we think about companies like Lowe's, Home Depot, even Ace Hardware, I know it's private, but you really think that those companies have kind of peaked. Like, we don't necessarily expect them to be growing sales that exponentially, similarly to like how we view Walmart. But Lowe's is actually running a lot of different initiatives right now that will help them generate revenue in other ways, whether that be through like their tool loan program. I forget what else they were doing, but I know Lowe's is making a lot of strategic steps to help grow sales and grow revenue. Actually, before we get to the other two and the top three performers for us, another pleasant surprise is Academy Sports, because given that that is a retail location, I guess it's not the only retail store we have in here if we want to throw Lowe's into that category, but given the environment Academy Sports operates in, which is really just like sporting goods, outdoor gear, things along those lines, kind of similar to like what Dick's has to offer, that is doing very well for us. And that is a company that I actually expected would struggle in this portfolio, given the rises in both wages as well as just the, inventory and supply costs, as well as the supply shortage for them. But again, can't complain about a stock that's doing well for us. Now, Blackstone. Blackstone is absolutely crazy how well it's doing for us. I think I say that every single time I talk about that, but I'm just so pleasantly surprised to see how well that has done for us. We have an average price here of $78.49 a share, and it last clocked in at $142 a share, and we have 75 of those. So it's almost doubled in its price per share since we've had this position, which is obviously what has done very well for us in this portfolio. And the other thing too is, as I've said before during this video, that doesn't include the dividend. Now, last I saw, I think they pay like a little bit over 2% dividend yield. They pay a quarterly dividend. So that is a $4,800 gain without even taking into consideration their dividend. If we were getting dividend payouts from this, then this position would be doing much better for us. But still, it's obviously Blackstone is a very powerful company. If you're not familiar with them, just like with all of these, I made a video talking about what they do, why I like them, how they make money, all of that fun stuff. So definitely check that out if it's something you'd be interested in. But I kind of bought that as more or less of like a real estate play than I did, a stock to get some huge growth. But, it's funny how sometimes that stuff just... it's just kind of funny how sometimes that stuff works out for you, definitely towards our advantage here. Now, given the recent news, I feel like the top performing stock in this portfolio doesn't really come as a surprise, but if you watched this video when I purchased this stock and a few videos after, I was not happy with this investment. I didn't necessarily think it was going to play out that well for a while. It was just losing us so much money inside of this account. But overall, I have to say it's played out pretty well for us at this point in time, and that is Tesla. Now, I do know that part of the reason why the stock has been performing so well is that, despite all these shortages in inventory, labor, semiconductors, all of that, Tesla has still been able to exceed their own guidance that they've been giving by increasing things like their operating margins. I think they've been able to meet, demand for their car sales. They've been still able to grow car sales. So Elon Musk, once again, is doing some amazing things with Tesla, and it just really goes to show that, well, it makes me question, why did I ever doubt that Elon Musk can actually do something so amazing with that company? As we can see now, it's up $4,900, so not much more than Blackstone, but again, this is all pretty recent. Now, with all of that said, I know you'd be crazy to sell out of the position at this point in time, but what I would like to do, I unfortunately can't with this portfolio because it doesn't allow for this kind of order type, is if this was actually my money and I was looking at this inside of my portfolio with Tesla, I would probably go ahead and enter in a sell stop order. Unfortunately, with paper trading or with Webull, I don't know which one it is, but definitely with Webull's paper trading, I can't place what we call a sell stop order. You can only place a sell limit order. Now, remember too, if you're not familiar with what I'm talking about here, I made a whole video talking about order types. I'll link that below, and I'll pop up just a quick little graph thing that I use to help remember this on the screen here. And it's slobs over bliss. So that middle line there is the market price, and then you just use those order types, depending on if you want to sell at a higher price or if you want to minimize your potential down losses on that. So maybe a better way of explaining that, what I would do with Tesla in this position is I would like to order or place a sell stop order at around, if it's at 1,029 right now, I'd probably place my order to sell 10 shares at about $1,000. Reason being is because this has already gained more than I could have expected in it, and I would like to take my losses, or I would like to kind of cut my ties, take the money and run, but still keep a little bit invested. Now, obviously, if you're still very bullish on this company, you think this can go to $1,200, $1,300 a share, then you would not want to order that position, because if it's going to go up and up, it would just be a waste to have that order out there. My thing is this stock has been very volatile for us, and I have made enough money to put a smile on my face with this position, not completely cut my ties. That's why I would only sell 10 shares out of the 15 we own. But that way, again, I can lock in some gains from that and maybe use that money towards purchasing another position inside of this portfolio. But overall, as I said a few times during this, I am very happy with the way this portfolio has performed. I really miss making these videos, and I really wanted to do one today, but again, just unfortunately, time did not allow for me to do so today. But hopefully in the near future, I'll be able to make another Watch This Wednesday video and keep adding to this portfolio to see what we can do here. If you enjoyed this video, I hope that you consider liking this video. Remember, leave a comment below if there's any stocks that you feel like I just kind of glossed over and maybe would like a little bit more context about. Leave that in the comment section down below, and if you haven't subscribed already, I just ask that you consider doing so. With all that said though, I'm going to wrap up here, so thank you so much for taking the time out of your day to watch this video. You could be anywhere in the world, but you're right here with me, and I really appreciate that. But I'll let you go ahead, enjoy the rest of your day, and I will see you next time.